In today's session we will try to understand the definition of accounting and its process. Let us understand accounting with a practical example. Suppose Mr. Ram starts a new business called the Nest Cafe. After start a business, Mr. Ram has to undergo various transactions. Now the question arises in your mind is, what is transaction? An instance of buying or selling something is called transaction. Let us understand it by an example. Mr. Ram goes for shopping. If Mr. Ram goes to a wholesale market and purchase coffee packets for his business, it is called financial transaction. Mr. Ram goes to the Ahmedabad mall. There Mr. Ram purchased a shirt for himself. This type of transaction is called personal purchase or personal transaction. A point to remember is that and accounts only records financial transaction, not the personal transaction. So this is the first step of process of accounting. Identification of transaction and events. Now let's see step 2. Measuring the transaction. After identifying the transaction, it is important to value it in monetary terms, then only the recording is possible. 2 boxes of coffee of 100 kilograms will cost, suppose 1,000 rupees. Then the recorded amount is 1,000 rupees. Step 3 is of recording the transaction. After measuring the transaction, recording takes place. This is an example, or you can say format of journal book where financial transactions are recorded. Now moving to step 4, which is classification of transaction. When Mr. Ram purchased 100 kilograms coffee packet for business. Mr. Ram purchased 10 kilograms sugar. In Nest Cafe, 50 cups of coffee are sold in total. Hot coffee costs 50 rupees per cup. Cold coffee costs 100 rupees per cup. Situation 1 gives us purchase transactions. Situation 2 gives us sales transactions. Purchase transaction are then recorded in purchase ledger. Sales transaction are then recorded in sales ledger. Ledger is made up from journal book. Step 5 is the summarizing. This step includes the summations of end amount of ledger. Summation of purchase ledger is 2,000 rupees while sales ledger summation is 3,750 rupees. After summation, trail balance is made. Trail balance is nothing, it is basically the list of summed up ledger. After trail balance, final accounts are prepared. Final accounts consists of trading account, profit and loss account, and balance sheet. Step 6 is analysis and interpretation. Final accounts results are analyzed, whether there is profit or loss. Step 7. Communication with user regarding business results. There are 2 types of users of business results: external and internal. Internal users are such as owners, employees, shareholder. External user are such as customers, government, tax authorities, suppliers, bankers. Oh, remember guys, I plus M plus R plus C plus S plus A plus C equals process of accounting. So definition of accounting. Accounting is the art of recording, classifying, and summarizing in a significant manner and in terms of money transactions and events which are in part at least of financial character and interpret the result thereof. Subscribe Yash Classes online. Do check out yashclasses.best.